Ladies and gentlemen of the crypto space, we're live on a Monday, May 19th at 11:33 a.m. And I figured I'd do a decent stream about a psychological slash emotional topic for once in a while. It's not like we talk about this shit all the time. All right, fine, maybe we do. Okay. So we all look at the same data. I'm looking at Bitcoin on the 3-minute chart. We all look at the same data. All right, maybe that's the easiest way to start this kind of stream. We don't look at the same data. Who the hell looks at a 3-minute chart? Not me. So that's the whole point. You know, everyone is looking at the same data from different perspectives. Now, humanity is plagued by the reality of subjectivity. I could only understand things in terms that I understand. It's like looking through a lens or glasses, or I'm looking, it's my filter. And that's everyone, the reality for everyone. Everyone has that same filter. And that filter contains biases and emotions and judgment and expectations. And worst of all, irrationality. Rationality applied to all that shit. So some of the worst is irrational expectations, because irrational expectations is painful. Because then you're just not meeting your expectations and you're disappointed. Um, with regard to emotions, fear. So people are looking through their filter and they feel a whole lot of fear because there was a whole lot of things going on in everyone's lives. Things going on in your life and my life, and all these things we're thinking about. First and foremost, we're thinking about responsibilities, bills, accounting. So, this is why the prerequisite to be a good investor is to be in a reasonable financial situation with regard to your accounting, spending less than you make, balancing the books, not having excess debt. Because otherwise, there's a whole lot of fear. Because if you allocate capital and you need that capital because of some fucking stupid debt position, it's going to drive you nuts. It's going to eat up your mental cycles and distract you from the practice. And it's a practice of investing. It's a profession. It's a skill. It's a badge of freaking honor investing. If you're good at it, it's like um, the scouts where you get a badge. Or military, you got a good badge, a badge of capacity, a badge of skill, diploma of sorts, diploma that only you can give yourself, dependent on your results. And your results judged against what? Judged not against total net worth, because that is a red herring, because that's not what people want. People don't, he says, this is a story, I'm digressing. This is a story about product development, marketing, and contractors and agencies. People don't know what they want. I think that that is maybe something that a lot of people know, but if you don't know it, I'm saying it. People don't know what they want. Companies don't know what they want. Product teams don't know what they want. Some people do. Obviously, the minority knows what they want. They have experience, they have a vision, but the vast majority have no goddamn clue what they want. Person that is obsessed with total net worth will get you nowhere. There's nothing that comes along with total net worth. And someone has to have a realization at some point to understand that how bullshit total net worth is. What matters is things that satisfy us emotionally. And that's really a freedom of sorts, freedom of choice. That's something that everybody wants, but some people might not recognize that's what they really want. They might say my total net worth may provide freedom of choice. Frankly, I think a lot of folks come up short on the story of being able to express what you want, how you can potentially get what you want, how to manage, how to manage this entire fiasco we call capital management. Anyway, look, I digress. I digress. So look at the data. Look at the data. We're looking at the 3 minute chart. Everyone looks at the 3 minute chart. No, everyone does not look at the 3 minute chart. So the problem is, and why there's so much noise in social media, it's because we're all looking at the same data, but we all have different perspectives. Now, I have an extremely high time preference. There is no business for emotion in this game. Now, I look from the weekly and the monthly standpoint. Care less about the 3 minute. I could care less about the 5 minute, the 15 minute, the 30 minute, the 1 hour, the 4 hour, the daily. I want to know what happens to this, where each candle is 7 days. I want to know what happens to this, where each candle is 1 month. That is what matters. The short time preference doesn't matter in the long run. Short time preference is something to focus on when you want to take advantage of people that don't know the fucking difference between long time preference and short time preference. Short time preference folks are predators or prey. They're either taking from someone or being taken from. I've told that story before, how capital gains and trading reduces to literally just predator and prey mechanics. So I don't like that perspective. I don't find it sustainable. I find it requires work and effort, whereas it is pretty obvious. See that's my perspective. That's my bias. To me, the destination is obvious. So how did I acquire that perspective or conclusion or sentiment? How do I know the destination is obvious? Well, obviously, we've told stories, 800 plus stories over the years on these streams, but the destination, fine, isn't obvious, but it's binary. A or B, left or right, up or down. Why? Because nature is binary, reality is binary, positive, negative charges. I mean, obviously, there's neutral, but that's another story, not necessarily the best metaphor. Electrical charge, but left, right, up, down, everything tends to be this binary reality. So that's the same, especially with price action. Price is going up, price is going down. It's not like it's going neutral. What the hell does that even mean? So the point is either everything continues or it doesn't. What does that even mean? If it continues, the system, the managers of the system are adjusting the parameters and refining the inputs and causing the effects that are required for the system to continue. Fine, now you actually have to understand what the system is, which is stuff that we've discussed. I need not digress to infinity and beyond. But on the contrary, the system doesn't continue. What does a failure look like? So here's some of the biggest, some good points. Anytime someone is fearful and they're like, "Ooh, the stock market's going to crash," you'll really see what they're offering with regard to ideas. They can actually define what a crash is. they could differentiate between markets and understand the bias of the United States. There's so much bias, and that was one of my early observations. How biased people are. They're like, "Ooh, the stock market's going to crash." Which stock market? Which country? "Oh, it's the U.S. stock market. It's all that matters." What the fuck are you talking about? It's all that matters. It's a big planet. It's a lot of people, and the United States bias is full of shit. And I needed a solution to that, and that solution was to understand the realities of global finance and how the system works, and how and then you really needed to understand humans, how humans work, and then you realize that most humans have the scale and scope of I don't know. I don't want to say a derogatory terminology. So suffice it to say, most humans are myopic. They look at the world through a pinhole. They have no experience or capacity to expand their mind beyond very simplistic perspectives. The stock market. I mean, it's a pretty simple leap to go the stock market of which country. Most people don't do it. I was younger, I didn't. I was younger, I didn't have that perspective. And I'm sure the equally vast majority of people out there do not as well. And how about the inversion of money? Or what is money? What is dollars? What is currency compared to money? How do you print currency from money? Uh, Buying dollars? So we all may look at the same data, but we all have a different level of perspective on the way the system works. Look, you still to this day, from a crypto perspective, so many folks are so caught up in this scarce money, better money, fix the world. You know, you may fix money, fix the world, or love that perspective. And are you living? Have you figured out a way to manage capital such that you could live, be healthy, mentally, free yourself from frustrations, free yourself with the capacity to make choices? So you could sell everything you own and buy Bitcoin. And do you have a sustainable capital management strategy? All right, fine. If all the power to you, if you've done that with just Bitcoin and you're sitting on 30, $50 million because you bought Bitcoin at 500 bucks, and now you could sell, 0.01% of your Bitcoin every year and you have like $1 million a year. All the power to you. That's not a majority. I would say that's an ultra minority, because that's not going to work with Bitcoin at 100 and whatever $1,000, $105,000 right now. Those multiples aren't available anymore. The opportunity doesn't exist. Now, proper education and conversation, you realize that that doesn't diminish the value of owning the Bitcoin, of owning that kind of cash. You just need to understand it for what it is and reframe it with regard to reasonable expectations. All right. So you're not going to get 100x, 1,000x on your Bitcoin. That doesn't mean it's not a significant position. That also doesn't mean it's everything people say with regard to capital management, or at least hardcore Bitcoiners. Oh, only Bitcoin. Oh, mm, buy Bitcoin. No, because that's not going to meet your expectations. The most important thing with regard to capital management, can what you're doing with capital meet your expectations? Or are you going to be disappointed? Because if you don't meet your expectations, disappointment is, is failure. And you don't want to fail, you want to avoid failure. And the way you do that is with diversification. So you fail, 3 out of 10 times. and you win 7 times, that's pretty good. That's good odds. Most traders say they just want 51%. Most casinos just want to win 51% of the time. So if you got good odds like that, you're doing pretty decent. So, um, the whole point of this title of the stream today is that we all look at the same data, but we all have our biases and we all look at things differently. And this is my story. It always has been my story about how I look at things differently. To me, this chart is absolutely insane, this Bitcoin chart. Whether you put it on logarithmic or regular, I don't know what the fuck people are looking at, but let me put on a paintbrush. You literally have, I mean, that's literally a resistance line dating back to 2021. Now, this is logarithmic, so you're talking about a spread of 64 to 74, $10,000 spread in those few lines because things get compressed as you go higher. This is the epitome of a resistance flipped support chart. This is one of the most beautifully structured charts I could think of. Breakout, retest, and we are right on the verge of a higher high. Like literally, we're at resistance of the trifecta of bullish confluence. Trifecta of bullish confluence. Breakout, retest, higher high. So like literally, here's the trifecta of bullish confluence. If I mean, have how many times have we talked? It's literally that's crazy. This is really quite the breathtaking chart. So Bitcoin will carry significant sentiment across these crypto markets. And when Bitcoin does a 1x from here, 1x, where you turn $50 into $100, that is not going to meet people's expectations. But $50 turns into $100 with regard to Bitcoin price, and that is going to have a remarkable effect with regard to sentiment across these crypto markets. Now, bear in mind that's also going to have an effect in macroeconomics as well. The Bitcoin's doing that. It's doing that for a reason, and we're probably seeing the move indicator roll over from here. DXY at 100.2. This thing falls back below 100, and move keeps rolling. 90, 85, 80. This is the perfect setup. We've been waiting for this for a while, and it's awkward. Maybe it's not awkward that the 10-year is at 4.5. Maybe this is the perfect setup for having to run down QT and figure out what they're going to do with rates because they have close to $10 trillion they need to refinance out of the Treasury Department this year. So in order to do that, I look at that 4.5. That's crazy. That's got a lot of people on edge, especially folks in government. They have trillions of dollars they're going to have to finance at 4.5%. Listen, you get that down to 2.25%, you just saved half your money. And that's interest, let alone principal. What an absolute disaster. Okay, so the end is near. So that's the perspective a lot of people have. A lot of people see these interest rates, especially Bitcoin folks, and they're like, all right, this doesn't work. It's going to fail. Okay. So what's the bet if everything fails and there's no money and the only thing that has value is what? You think everything goes straight to gold or straight to Bitcoin or straight to bonds without chaos, without basically zombies running around, more or less? The absolute anarchy to the point where the primary currency really needed to survive is guns and ammunition and canned food because the system is so fragile. Do we see like are people really betting against Bitcoin going up with the argument that the system is going to fail Have people even seen social media? Thought about the psychology of the average person? And psychology meaning pretty simple things. Broadly, what are their expectations? And what happens to them with regard to social civility and violence if they don't meet their expectations? Oh, some 50,000, 100,000 college graduates that are 100, $200,000 in debt, and they can't pay it and they can't get jobs because the whole workforce is collapsing, and they're on social media and everyone's amping each other up and driving their expectations through the roof. We're on the verge of anarchy and chaos, absolute chaos. So the bet, if Bitcoin doesn't go up and the bonds sell and we're at four and a half, five, five and a half, six, six and a half, seven, and move blows out to 150, 170, and the dollar rips to 110, 120, there's no there's no reasonable way for this whole thing to convert to a different currency. The BRICS currency, a gold backed currency, it's going to work. Everyone's going to stay civilized. You know, when the shelves aren't stocked and people are hungry, they will break into other people's homes and they will get violent and there will be disorder and chaos. But there's only two bets, and it's not what people think. These people are out there on social media saying, oh, the Bitcoin price is going to go down. Okay, there's two bets. Either the Bitcoin price goes down and then up, or up. And how do you hedge that bet? Prepping, guns, ammunition, and a bunker. Because the destination is either down, then up, or just up. And the hedge is disorder and chaos. So that is how I've maintained my sanity over the years. All these years waiting for these crypto markets to do what they're going to do at the destination. And if you take a look at Bitcoin, they literally did exactly what I just said. Now, let's do this. So the crypto markets are either going to go up and to the right or down first and then up. Well, that's exactly what happened. Bitcoin went down first and then up. See, the problem is folks are biased about the time perspective. They're looking at it now in 2025. Where have you been in 2024, 2023, 2022? Oh, because in 2021, Bitcoin was going straight up. And then it decided to go down first and then up. It's pretty simple. So this is literally the last 3 years. It's confirmation of cyclicality. You don't just go straight up and to the right. And maybe from here and a weekly time frame, Bitcoin goes up. But if you zoom out enough, everything goes down first, then up. Cycles will cycle. If it goes up enough, it'll eventually come down and then go up again, which is why I came up with my rules. Very simple rules they are. Rule number one, rule number two, and rule number three. If things are going to go up and then come down, logic says execute rule number one when things are down. Own more assets. Rule number two, know when to stop buying assets. Well, things that came down start going up. You don't want to own assets when they're going up in price. Pretty simple thing. Wait for them to go down in price. Okay, that's rule number one and rule number two. And if you're having a problem with executing rule number one and rule number two, you're probably looking at daily charts or shorter. and you need to zoom out to weekly charts or longer. And then rule number three is another story, but it's my favorite story. But the burden is you can't execute rule number three without an effective threshold, an effective quantity of capital. And you also cannot execute rule number three without understanding, appreciating, and fully absorbing the realities of rule number one and rule number two. And the irony is, is it ironic? In hindsight, that was myself. I did not execute rule number three in 2020. I certainly did not execute rule number three when I was younger in my 30s in 2016 and 2012, 13. I didn't execute the rule number three. I didn't even know what rule number three was. I didn't have rule number one or two. I learned rule number one years ago, 2016. I learned rule number two probably most recently in, let's say, 24, 25. And I learned rule number three prior to rule number two. I learned rule number three in 2022. Having learned rule number two after rule number three, all right, fine. I did things ass backwards. But the fact is, now I got rule one, two, and three, which leads me into 25, 26, and 27. Look, I'm thinking and prepping and planning for my behavior and my actions and my activities over the next 3, 4, 5 years. And that's what gives me my sanity. The destination is clear. And the only measure of my success is my consistency in executing against my rules. The only failure I could have is not following the rules that I've learned and defined for myself over these years. If you have not defined your rules, that's twofold. You probably don't have enough experience yet to define your rules. It is imperative. One of the most important experiences in these crypto markets is to watch these markets go absolutely parabolic and then feel them collapse like a black hole into the darkness of the night, because that's what they do. When the world is over. You need to feel that. You need to appreciate that and understand that. And you also have to know and understand why it's different in 25 compared to 20. So context is forever relevant. Context will forever be relevant. And, the scale and the scope of the shit that's going on is truly unique right about now. Very different in 2019. 2019 it was over. There's nothing survived because there was nothing to survive. There was nothing meaningful. No infrastructure, no utility, no businesses, no economy, no economics, no, dare I say, monetary velocity. Because we sure as hell have velocity nowadays in these crypto markets. What the hell is that? All right, so maybe you have to understand a little bit about macroeconomics to understand these crypto markets. Ain't that the truth? You know that's the damn truth. Market looks pretty constructive. Less than 101. Why? Let's look at it on the weekly. Below the 200, we got working on a bear flag with at least one candle rip through the 10 SMA on the weekly. So this is a constructive chart. Rip to the upside right into short-term moving average resistance, 10 SMA on the weekly. Let's go to the monthly. See, is this would be the bull market. This is my 2 cents, ladies and gentlemen. I'll go out there and I'll say a couple of things. So here's your 2016, 2017 bull market in crypto, and here's 2020 and 21. And I've showed these thousands of times. One, two. Those are your two bull markets. And obviously 22 to current has been bear market the last 3 years. Here's your bull market. And then what happens when you get to the 200 SMA? That's some uncharted shit right there. So the 200 on the monthly, you know, you can't go back and say like in 2013, which was a bullish year for crypto. But it wasn't crypto. There was nothing. It didn't exist. There was no economics. There's no market. There's no economy. So you can't say there's a comparison to be made. But you can say from a macroeconomic standpoint that this is what's next on the list. I mean, all the confluence suggests continuation to the downside for the DXY, and then something blows up. Japan's going to blow up or some shit with this interest rates. It's 40-year interest rates. They can't afford this shit. So what happens is the dollar rips to the downside. Everything goes monumentally parabolic beyond belief, and then something absolutely explodes, and then you get some bullish dollar price action, and everything is absolutely collapsing around you. Absolutely catastrophic collapse when if the, if the dollar goes down to 92 and bounces, it is going to be a breathtaking collapse of everything across the board. And what do you see here? And it's not the interaction with the 200 that matters, but these are your, well, this was really a double. These are your bull markets. One, two, and whatever the hell is about to happen between now and 2026. But I would suspect it'll be a heck of a dip below the 100. So 2016 and 17 didn't get you below the monthly 100. Then sure as hell didn't get you below the monthly 200. So 2020 and 2021 gave you a double dip below the monthly 100, which is why if you look over here on Bitcoin, you got a double top right there. Oop, There's here's your double. Here, look, this circle right here is literally this right here. Okay, dollar down, crypto up for a very obvious economic reason. So what I'm curious about is right here. I'm curious about this monthly 200 because that things would get weird. That's like structure of the system type changing, maybe, powers that be deem monetization of crypto to be more favorable than monetization of equities. I don't know. I don't know. Anyway, hope that helps. That's my monologue for today. 37-minute monologue. Kill us in the house. Much a pleasure. Andrew, it's time. I am here. Hey, Captain. Hello. Did you see Gov Abbott moving to eliminate capital gains in Texas? I don't think it'll be. Um, I don't think it'll be hot air. I think the system needs to change to garner attention. What happens is just like we fight over capital as resources, the states fight over people as resources because people are productive and people generate tax revenue either by capital gains, which Abbott wants to get rid of, or sales tax or property tax. I don't freaking know. The point is this: we are resources to government, just as capital is resources to individuals. So I expect things to change. You know, there's a lot of states nowadays that have no income tax. Florida being one of them. We look forward to potentially seeing no property tax in Florida. Now, it's complicated because there's this concept of regressive taxes because sales tax affects everyone indiscriminately. Therefore, it hits the less wealthy the most. On the other hand, increased sales tax decreases discretionary spending. which also slows GDP because that means people are spending less and not growing, economics. They're not spending capital. The velocity is slowing. I don't know. It's complicated. All I know is I look forward to the system changing because I don't think anyone thinks it's fair at this point. But I do know from a state perspective, it's good to see arbitrage. Now, that's something I appreciate as I've gotten older. Um, Geographic arbitrage. So every state has different rules, and that's a very big deal with regard to tax law, corporate law. Yeah, the Texas. So corporate law is a big deal. Trust law, which we've discussed. There's three types of tax laws: personal, corporate, and trust. And the states have a big role in all of this because of federalism. Founding fathers love federalism. Amendment, yes. So people can actually look up the state laws and choose to live in a state that they appreciate the most. For instance, if you don't like income tax and you live in New York, like, I don't want to pay income tax anymore at the state level. You can move to a state that has no income tax. It's called geographic arbitrage. You don't like your property tax or you don't like the rents are expensive. You can move to a state that has significantly less rents. Now, might be a different quality of life, a different type of life in rural Wyoming or rural Louisiana. I don't know. But that option is there. It's called geographic arbitrage. And that's what our ancestors did in this country, 13 colonies, and they got on, you know, carriages pulled by horses and they went west. And that's our history. Our history is literally rooted in geographic arbitrage, yet our population has become so, what's a good word? Pussyfooted? People are so weary about doing difficult things that, you know, every population is going to change, but I don't want to pass judgment saying it's a shame to see where we've come to as a population. We're not stronger. We don't make better decisions. We don't. Anyway, whatever. I don't want to get into that. So I would hope that at least my ideas could help people make better decisions. What I like to do is observe and realize and respect and notice the shit that doesn't most people don't notice. I like to see the things that most people don't see and tell stories about the things that most people don't think about. I've been writing more to articulate my thesis, and for me, this market is the most obvious place for our capital. I think that is overwhelmingly a rational statement. But how do you convince your better half? I haven't figured that out yet. You convince your better half over about an 8-year period by doing well with regard to capital management, by succeeding. And, you know, there may be balances that are needed, like you can't deploy as much capital as you wanted. And then guess what? It's the same thing whether it was just you managing the capital. Because if you only deployed 25% of the amount of capital you wanted to, and if you and a couple of assets go 100x on the money, yourself as well as your better half would be kicking yourselves in the ass for not allocating more capital. And that's what everyone always says. I wish I invested more. So we're not going to be in that position. Well, hopefully not going to be in that position because we've been talking about this topic for some years, preparing for the next parabolic phase of these markets. Um, how do you convince your better half? The reason my better half It's because I show her the accounting, I show her the books. She understands how to not invest. She knows how to turn stable coins into dollars. She knows the importance of stable coins versus dollars, meaning why we have an account. You don't keep all your money in a bank account. Got to diversify, have stable coins, because stable coins can produce a decent return on capital with adequate quantity. Probably the first step, Dean, is conversation. And I know a lot of folks are resistant to conversation. So probably the best thing I could say to you is I don't have a good answer. Probably the best thing I could say is try. It's always worth it to try. And conversation is the start of any change at all. Hope that helps. Tape pusher, you deserve far more followers. Unfortunately, people favor instant gratification. Well, it's not gratification, it's instant failure. People are stuck in YOLO, where they bet $100 and it either turns into $1 million or zero. They want instant failure. They want to know whether they're going to succeed or not right away. They're like, I'm going to do this. And if I'm going to fail, I want to fail fast, fail quick. Instant failure. The vast majority of people are failures. There's no time preference involved in the decision making process. It's unfortunate. You can't teach patience. It's a cultural thing. Now, honestly, nowadays I'm big into if I was another life, I'd be in like Tibet, be with some monks for a couple years. But nowadays, the extent of what I do is I like TCM, traditional Chinese medicine, and Ayurvedic medicine. And I understand it the best I possibly can with supplements and routines and practices and activities. And I love a sauna. I love the frequencies. And acupuncture is great. I even like a chiropractor. A little bit Western. So I don't know why the hell I digressed into that statement. But point is, um, everyone should look into some of those things because capital management is very much a component of self maintenance, self care, because you cannot manage capital unless you are good in the mind, unless you are calm, unless you are one with nature. You have anxieties and fears and frustrations, you will not manage capital well. So you must check that shit at the door and figure those things out first. Because once you get a control over your emotions, that's when you start to succeed. Speaking of, you have to feel it collapse. The amount of times just holding stable coins for many years was the most lucrative play is ridiculous. I'm just not sure history will rhyme. Now, bear in mind, this is why I talk about 2019 so often. There was nothing in 2019. You couldn't hold stable coins in 2019. There was no holding stable coins in 2019. I mean, they were available. You had Tether and you had Circle, but you weren't. Nobody understood what stable coins were in 2019. What you had was the dollar deposits on some stupid centralized exchange. And if everyone's selling everything for dollars on a centralized exchange, they're going to extract that shit to a bank account because what's the point of having dollars on a centralized exchange if you're not going to buy crypto because everything's falling apart? So half the thing is stable coins and experiencing the epic drawdown. But it also really resonates with me because I remember 2019 so meaningfully. There was so many things we did and ended season 2017, so to speak. I mean, Masternodes. I love Masternodes. It was so much fun, and there was only one that survived that's meaningful to this day. Now, that's Syscoin. The only thing that's meaningful. Zero survived from Zcoin, but it's microscopic. I don't know its relative significance. Technology, great technology isn't always the greatest investment. Syscoin, I think, still has some legs and momentum. Still find it quite interesting. But that's what else survived? Nothing. Little to nothing survived from pre-2020 era. So as much as we could have this newfound knowledge of stablecoins and macroeconomics, you really need also that experience from 2019 to tie it all together. Dean, I learned rule three first. Now learning rule one. Hopefully after the cycle, I'll learn about rule number two. Rule number one is a simple one because we make money, we work. Yeah, and it doesn't matter how much people make because you always have 10 bucks, $5, $1. I mean, I doubt anyone, even if you're listening to me and you're making minimum wage, you got a buck, you got a dollar, you got 4 quarters. Buy more assets over time. Now, the more you buy, the better the potential is. The potential for what? The potential for a favorable capital outcome, favorable economic outcome. So that means you want to buy more assets. What kinds of assets? That's the whole rest of the equation. That's where rule number three comes in. And that's where understanding scarce money comes in. Scarce cash, like having Bitcoin part of the cash part of the portfolio. Okay. So that's all part of rule number one, own more assets. Currency is not collateralizable. Money is collateralizable, and money can be collateralized to print currency. And it turns out that Bitcoin is a type of collateralizable cash, more closely aligned with money than a currency, in my opinion, because you can actually collateralize it. You can't collateralize cash. Uh, Currency, you can collateralize money. So being collateralizable, Bitcoin is more closely aligned with like bonds, debt instruments. Listen, ass backwards squared. I did it too. Just like I described learning rule number three before rule number two. I also learned about macroeconomics vis-a-vis these crypto markets. I wasn't into macroeconomics in 2019, but in order to understand these crypto markets in 2025, I needed to understand the way global economics works. I needed to understand what the hell a dollar is. Isn't that the most profound question? And maybe I could end the stream on that. What is a dollar? You can't answer what a dollar is. I'm not saying you, Dean, obviously. I'm saying everyone can't answer what a dollar is. How the hell are you managing money? Because how the hell do you get dollars from money? And you can't understand dollars if you can't understand that money isn't dollars is aren't money. What is money? Oh, then they'll be like, oh, money is a store of value and a medium of exchange. And then you're like, oh, this guy dropped the craziest idea. Oh, store of value, medium exchange. And then a couple years later, you're like, oh, okay, there's a lot more to it than just that. Bitcoin is a money. Bitcoin fixes everything. Yeah, okay. You know what fixes everything? 5 grand on a Friday. That fixes everything. That pays all the bills, takes care of everything, and allows you to get some dinner. I don't, everything else is just noise to me. That's what really fixes everything, isn't it? Everyone's like, "Oh, fix money." Fuck yeah, I don't want to fix money. I want to fix Friday. Make Friday great again. I don't want to fix it. I can't fix money. I'm just me. Little old me. I just want to fix my Friday with my family so I could order in some sushi and shit and have a good Friday night. Just saying. Make Friday great again. That's right. Everyone's out there trying to fix money. Focus on Friday. All right, let's wrap it up for today. Thank you all for joining me. Appreciate it as always. Monday, May 19th at 12:23 p.m. 177 people made it to the end of the stream and are now that much more rational because of it. Stay calm, cool, and collected. It's the start of the week. Y'all make it. We'll regroup later this week, whether it's a Wednesday or a Friday. Until then, be well, stay rational. Peace.